Welcome to the closing bell, everyone. We're back at it. Mark, are we at a turning point? That's the topic for today.
Yeah, turning point. After the DNC this week, I'm not sure we got a turning point in our head if Kamala gets her way, man. It will be lights out. But yeah. So we could be at a turning point coming up, but we'll see how that plays out.
That's a good point, and that's actually a turning point that we're talking about, or one of the turning points is turning point of policy, turning point of drastic changes that have been brought forth by the Harris campaign. Are all of them going to be implemented if she were to become president? Probably not. You get split government, which we'll get into, but it's a very big contrast to Trump policy or even like traditional like Clinton Democrat policy, right? I mean, he actually lowered capital gains tax rates when he was president. So
Yeah.
it's quite interesting the switch there, which we'll dive into. But anyway, that's the topic for today, ladies and gentlemen. It's going to be a good one. It's going to be spicy. You got salt and pepper here. We're adding a little spice to it as well. So let's dive into the markets. So we had a little bit of a downdraft, a little meltdown here, right? S&P was over
Wow.
8% down from its highs. We're actually kind of rallied back quite nicely, right? Right, Mark? For the week, Dow's up almost 1.3%, S&P up over 1.4, Nasdaq 1.3, and the small caps leading the way at over 3.5% for the week. So, any thoughts on the movement in the markets or kind of transition there?
It's been amazing. I will say that we had that downdraft to your point. Back in early August. I mean, just this month. I mean, what, a couple of weeks ago? I mean, we were
Mm-hmm.
getting slammed, getting racked. I mean, it was like body blows, man. It was like, where are we headed here? And then, boom, just turned around, caught a bottom, hit some key, kind of support indicators, moving averages, and really bounced. And now you got the S&P 500. I mean, we're in like points of new highs.
Mm-hmm.
So yeah, it's been quite a ride here. A lot to do with I mean, obviously interest rates. I mean, even today, big move today. Powell talking about they're going to start cutting rates in September. So a lot of that's baked into the cake, they think, but at the same time, that's kind of what they're saying now. So it'll depend on what kind of numbers we get here in the near future, job numbers, CPI, PPI numbers, to
Mm-hmm.
see where, do we go 25 basis points cut or is it 50? So markets
Mm-hmm.
like lower interest rates. It helps companies make money, and it helps investors save money, as far as on credit card debt or whatever.
Mm-hmm.
So it's lower rates are always good for the economy. The question is, I mean, there's a lot of, I can argue that it's a little bit early to be cutting rates even in September, because, inflation's still at 3%. I mean, every time I go to the store, I'm like, holy smokes, how do people, I mean, it's
Yeah.
crazy how expensive things are. So, you know, I mean, a lot of people are thinking it's political, anymore. You're not sure if you can trust the government agencies. They all seem tainted, in how they, even the Fed, I mean, interesting time to be cutting rates right during an election, coming up in here in November. So anyway, yeah, so markets look positive though. I mean, you can't fight the Fed. Here's the deal. Like
There
in
you
this,
go.
you really can fight the Fed when they're lowering rates. It's positive for stocks and bonds, obviously. Interesting times.
Interesting times, and then I like your point, to the Fed. You can't fight the Fed, but the Fed's taking a lot of credit here for moderating inflation. I mean, we've had extreme inflation for the last 4 years. Now, the problem with moderating inflation is that inflation's still here. You're still paying those same high prices at the grocery store. It's not like we have deflation where, oh, your $12 bananas are now going down to $4. We have extra money in our pockets. That's still not the case, and Americans are hurting on a daily basis. So I
Yeah,
think the
man. There's a great Bible verse that pride comes before a fall, typically, right? So when you start talking trash and getting cocky, watch out. It could be ugly.
yeah.
Reading this cool book about World War II, and it was amazing to see. This is a total side note, but it was interesting to see at Pearl Harbor how after Japan, you know, wrecked Pearl Harbor and surprise attack, right? Uh, how almost arrogant Japan got and
Yeah.
how powerful they were.
Hmm.
And then started to get kind of, made some mistakes along the way and got, beat up. Yeah, I mean, just,
Yeah.
you don't know how that turned out. So anyways, interesting books, really very bit informative. And you see that in lots of, sports. You see it everywhere, man, whenever you start getting cocky. And frankly, with the Fed, if they hit a soft landing, we said this before, it's a lot to do with luck, man. I mean, because that's really hard to do with all the things. And we don't even know if it's a soft landing. I mean, there's some numbers out there that could be, we're, headed for a recession. Some people think a deep one. So again, we'll see how it plays out. It's too early to tell. That's what I'm saying. You can't be talking trash about, soft landing. I think it's a little premature. We'll see.
Interesting you brought that up in terms of data, which we'll cover here. Some alarming and interesting data. We've talked about a few different things. And again, I don't want to be prideful either because I don't want to have a fall. So I think it's good just to call it out and say it
Silver.
is what it is.
Yeah.
But it's interesting Powell comes out and says, oh, we don't want the labor market to soften anymore. We don't want the economy to weaken anymore. So they're seeing some alarming signs, I think, behind the scenes as well that are prompting them to say, hey, now's the time to cut rates. And some of those numbers, which we'll dive into here, is the labor market. We talk about labor market quite often. And you brought up a point months ago, and we just talked about it prior to recording here on Friday afternoon. You said, what did you tell me about the jobs revisions?
Oh my gosh. I mean, so you look at revisions, right? They come out with these numbers and they're always, oh, all these jobs. And then literally every time, when everybody's moved on and, basically forgotten about the last,
Mm-hmm.
report, there they go, they revise those old numbers and check up unemployment. You
Yeah.
know what I mean? Like, you know, I mean, fairly significantly. And then this week, all right, then, like you're going to talk about here, I mean, we get a major number where that's happened, like 800 plus thousand revision. That's huge. That's not, and frankly, I don't know how you make that mistake. Like, that just doesn't even feel like, I'm not sure that, I just don't think I'm not sure it's legit, bro. I
That's a
mean,
big rabbit hole. Yeah.
big. Like, and some have said it's even maybe over 1 million. You can't make that's a big. I mean, like, what are you doing? I mean, somebody's not doing their job or whatever to have that type of revised number. So it's been pretty consistent. And again, sorry, I'm going to go. That means it's just like to me, it's like how do we trust? I mean, I'm not sure. It's hard to
Yeah.
trust, right?
Yeah.
So
Yeah, absolutely. And to your point, 818,000 less jobs, 818,000 less jobs added than what they previously told us
yeah,
in the previous 12 months through March of 2024. So just break down on a monthly average,
I don't know if
170,
it's hit that high. I don't know that it's been that high since I think what maybe '08 or '09 when
probably. Yeah.
the financial crisis where they actually missed it that bad.
Yep.
I mean, we haven't been in any kind of crisis like that. I mean, how's that? And I just don't get how that happened. So, and again,
Yeah.
it just reeks more of intentionality in some ways. I don't
Mhm.
know. Just
Yeah.
saying. I mean, I don't know for sure. It's just I'm speculating, but that's what it feels like.
Yeah, and so you bring up, if you average it out on a monthly level to even it out, 178,000 is the actual monthly jobs added, which is quite a bit lower than what they've been quoting. Even the latest job numbers this past week here, or this week, and then 246,000 it was the previous average monthly jobs added. So quite a stark difference over, almost 70,000 jobs that were less that were added. So that's alarming, and I think maybe the Fed that's part of the reason what they're seeing now all of a sudden. Because last month his thing was, oh, we don't know if it's time to lower interest rates. We're going to proceed with caution, and then
Yeah.
now all of a sudden it's like, oh, it's time.
Oh yeah.
It's time.
Here we go. Yeah.
Yeah,
And
here we go.
again, got an election coming up here soon, so very
Yeah.
interesting. And the
Hmm.
other thing is that part-time work. I mean, you got part-time workers. Those numbers are up, full-time down. So, what does that say? Is companies, is that company related where they're making the decision going more part-time or people working more than one job? I just think that the average, the middle class out there, man, it's rough. I
Yeah.
mean, it's not, it's a challenging time. It's
Yeah.
a challenging time. I mean, go to Costco. I mean, just do your normal. I mean, compare what you spend now in a basket at Costco to what you might have spent. You know, you got a family. You know,
Yeah.
a year ago, 2 years ago. I mean, it's like unbelievable.
It's crazy. It's unacceptable. But and to speak into those facts, let's talk about spending habits. So some interesting credit card debt statistics that I came across here that I want to share with our listeners and viewers. So credit card crisis that's been going on here. We've talked a little bit about it probably months ago now. But the credit card debt in the United States is $1.3 trillion and growing. The average amount of credit card debt per person, $6,500. The average balance increase since 2022. So that's basically, height of inflation, 2022.
2 years ago, it's only 2 years.
Only 2 years ago, average balance has gone up by 30% or more. Delinquency rates. So those are people that can't pay their bills. Highest since when? The Great Recession, since 2011, which is interesting in its own right. Now, this is more about the mindset and the health of the borrower. So the percent of borrowers who claim they'll never be debt free, 1 in 3, 34%,
That's a
which
lot.
is that's crazy and it's sad. It's very sad. And then the likelihood of those with debt to be depressed, greater than 300% increase likelihood to be depressed than somebody that's not. And then percent of people that lose sleep over debt, 48%. So these are just some alarming numbers. And obviously that, we talk, we're in the business of financial health. Health is wealth. So it's scary. It's sad. And we need to get this figured out. And there's a lot of reasons behind it. But again, just in terms of the underlying strength of the economy, it might not be on as solid footing as we think in some ways, especially for the consumer.
Yeah, it's a challenge, man. I mean, it's just it's tough. It's just tough. I mean, I watch. There's so many examples.
Mm-hmm.
It's a tough time. And so, yeah, we want interest rates lower, but we need spending under control. We need leadership that actually cares
Yeah.
about the middle class and actually, doesn't just talk it, actually do the things that are necessary to help them. So, yeah, it's a major election this year, and some major discussions and decisions have to be made. To be in that kind of debt, I'm not so worried. I mean, yeah, it's a lot of money, and there is, it's just if it keeps piling on, at some point there's going to be a breaking point. I mean,
Yep.
you just can't continue. So, man, yeah, it's concerning. But I'm hopeful. I think we'll get into the right place here. Hopefully soon.
Yeah, and then this is kind of piggybacking into our next conversation here, is policy. We're going to talk about policy here. We have one former president that had the world's greatest economy that we'd ever seen, and that's just a fact. That's not a political statement. That's just, that's the way it was right prior to COVID. We had the world's greatest economy that the world has ever seen, and I've heard people that were moderates that are way smarter than I am talk about that. And again, I think sometimes.
And it wasn't just for the highest class people. It wasn't just for the rich.
Nope.
It was actually, those numbers they happened in the middle class and in the lower class, and in all ethnic groups.
Yes.
That's why it's very interesting to see the Republican candidate getting much higher, percentages. It sounds like, from African Americans, for Hispanic.
Mhm.
These people are like, they made more money under Trump.
Mhm.
And so, again, because, it was less regulation, less taxes, more
More spending money, low inflation. Yeah.
open, oil fields,
Yeah.
where drill baby drill things were happening, which I think had a lot to do with the inflation, and still does as part of that inflation piece. But anyway, yeah, it was significant. Yeah, and it was across the whole gamut of all classes and ethnic groups. So
Yep. Absolutely. And that's the thing we want to talk about. So then you have a presidential hopeful that on the other side they want to increase taxes to fund government spending and their agenda. So you've got corporate tax increases that are on the table to 28%, which we're now at 21%. You have capital gains, the highest. So people that are making in those top brackets, their capital gains would probably exceed 40%. And again, none of this is set in stone because it's not policy that's implemented, but these were proposals set forward by the Harris campaign. So you're having people pay even more capital gains on top of what they already pay. And then the big one, and again, you can argue on either side of the aisle. You could be for increased taxes on corporations and capital gains on the wealthy. You could be against it. I'm against it. We know, you're against it. And that's okay. You can have differing opinions on those because those are already implemented. And again, that's the beauty of America. We can have differing opinions.
Yeah.
But this last one, which we're going to talk about, unrealized capital gains tax, that is just horrendous, outrageous. I don't know how you implement that. That is, they say, we would generate, I believe, $800 billion for the government. They say something like that. If an unrealized capital gains tax was to be implemented. So let's just say this is completely hypothetical and outrageous, but we're homeowners, right? And let's say you made $1 million on your home, right? And you're still living in your house, right? You bought in 92 or whatever it was.
Yeah.
Right. And you're up $1 million. You made a good investment. You've added on, great location, all that. So the government comes to you if this gets implemented and says, you know what, Mark, I want to take the taxes on your unrealized capital gains of $1 million. Let's say $250,000 that you owe us, $250,000. So number one, if you're a working class person or you're no matter what socioeconomic ladder, part of the rung of the ladder that you're on, where on earth are you going to get $250,000 of cash, or where you don't have to liquidate something else? And again, you might have it, but again, that's a large chunk of cash for 99.9% of Americans. That's a large chunk of cash. Where are you going to get that from? You don't have to liquidate something else. You're going to have to sell your house to pay that. What happens if the house value goes down the next year and you're on the hook? You can't get your money back. So it's just in marketable assets, real estate, crypto, secure stocks, bonds, whatever assets that have the ability to appreciate and grow, and then to be taxed on that. That's going to stifle. That is going to bring that type of investment opportunity to a standstill. That would happen overnight. Nobody would want to buy houses anymore. Nobody would want to invest in stocks, bonds, crypto, whatever your marketable assets are, right? I mean, am I wrong on that?
But yeah. How many clients do we have who have a house, they're in retirement, they've owned a house for 30, 40 years, paid it off, did what they were supposed to do, made their payments every month, paid off their house, retired, now maybe spouse has passed, there's this is just an example, and they're sitting on all, just to your point, all these unrealized gains. Again, definition of unrealized gain is that you haven't sold. Mm-hmm. Now, realized gains is when you get taxed actually on the difference between the money in and what you get, right? It's called a capital gain. That's a realized gain when there's a sell, whether it be a house, whether it be a stock, a bond, whatever it is, there's a gain. And those are taxed, right? That's the capital gains tax, and we know about that. But what you're talking about is not even moving. This is the fact that you have that. You get assessed your house at some level, and they say, we're gonna, come on, it's like a joke. I can't believe we're talking about this stuff. It's silly. Yeah. It's idiotic. And so but yeah, to your point, and those are things that have been talked about, and then they're being said, and hey, vote for me. This is what we're going to do. Oh, all right. Good luck with that. It doesn't matter if you don't have anything already. What do you care?
Yeah.
If you're in a place right now where you're already getting government help or whatever, it doesn't matter. You don't care about that decision. So but if you're not, it's pretty big deal, and it'll crush the economy. So anyway, yeah.
So it's good. Yeah. And it's good just to talk about it again. It's the likelihood of these outrageous policies implementing, even with a Harris presidency. As long as there's a split government, we're going to continue on our merry way. Gridlock, markets like gridlock, nothing crazy will pass. But there will be some interesting, especially for estate tax purposes. We talk about the sunsetting of the Trump tax cuts.
Yeah. Yeah.
Will have a big impact on some of our clients and quite a bit of America if you live in, good places with great real estate or, retirement, great, you've been saving all your life, retirement accounts and investing properly and being frugal, being good with your money. It could be quite an interesting time.
Yeah. Yeah. So, I mean, if you're listening to this, my suggestion is you stay alert. Don't, as you're getting ready for elections, don't listen to what people say. Look and learn of what they've done in the past,
It's
because
good.
that's who they are, right? You can say, I've been here for 3.5 years already, and we haven't done this, but boy, we're sure going to do it the next 4 months.
Yeah.
That's a bunch of
Yeah.
garbage. So it is what it
Good
is,
point.
and it's in the extreme. And that's what I was talking to a client today. It was just actually, we're talking about elections and how we talked about this historically. Elections have been. It doesn't really matter who's. In
Nope.
fact, I heard Clinton the other day talking about, yeah, when Democrats are in charge, the markets are, I don't know, something like better, it's like he gave a score 11-1 or something like that. He was claiming, I don't know I don't know where he got the numbers, but the reality is that it hasn't, that's true. Over time, it's been pretty even. And I think what I've read is like slightly the Democratic, majority has had a slight better, it's like 11.5 to 10. It's
Yeah.
like it's close, but it's pretty much the same. So it hasn't really mattered. But we're getting to a point now with such an extreme, looks to be Marxist. I mean, Marxist
Very
fascist.
left. Yeah.
I mean, it's beyond left and right. It's like
Yeah.
extreme
Yeah.
left to where it's pretty scary. You're talking about things that we've never really even thought about here in the
Yeah.
country before. So I don't know, man. I'm even like, wow, I don't know what to say. But I don't know where it's going to end up at the moment. So I'm hoping that we get some sanity here and do the right things come November, but we'll see what happens.
Yeah, and to your point, going back to, I actually wrote a paper on the presidential economic cycle back when I was working for a Fortune 500 financial company years and years ago, over 10 years ago now, talking about like those numbers between Republicans, Democrats, and it really, like you said, it really doesn't matter. The margins on Republican president, Democrat president are so slim. Democratic presidency has like, I think it's 1% or less difference, delta in S&P 500 performance. But again, then you got to look at, is it unified government or is it split government? And, there's so many factors. Presidents get too much, sometimes get too much um, plaudits for good markets when there's so many underlying factors. And you can implement good policy or have good ideas, and that affects it. But overall, sometimes they do get a little bit too much credit. So my point being is, on the flip side of that, Republicans could come back and say, well, when we had a unified Republican government, House, Senate, and presidency, that was the best markets had ever done. So utilizing that, it's like, okay, let's not play those types of games.
Yeah.
Let's just look at the policy.
Actually, markets they like a balanced government. They
Yep.
like it when they're you might have a Republican president and
Yeah.
Democratic
Yeah.
House or whatever. I mean, they like the balance of power. I think
Yeah.
most of it do. And what we're talking about now is that we're going so far, and some people say so far or so left. The left has gotten so extreme left,
Yeah.
and even a lot of people who are moderate Democrats. Hey, look, so I'm a Republican, right? So I'm pretty conservative, but I grew up in a family where my dad was a truck driver, my mom was a stay-at-home mom. We were born in the '60s. I mean, we were Democrats. I mean, I wasn't voting, but I know my father, being a truck driver and part of a union.
Yep.
In those days, it was like workers versus management, right? That was
Yeah.
the deal. That's way before you. That was the reality of the Democratic and Republican Party. And he was a worker. He was a truck driver. So we were Democrats. And until something things started happening in that party with yeah, just abortion, different things that they started doing. I know my parents, being very churchgoers and Christians, they were like, "Oh, I can't do that anymore." But at the same time, over the years here, the Democratic Party has really moved even further left to
Yeah.
the point where now we have a candidate who's actually the daughter of a Marxist who's now running for president. And it's crazy, right? I mean,
Yeah.
again, so that's where we are. And so you see a lot of, it's just like that middle ground. So many people I talked to that have been lifelong Democrats who, you know, and that's fantastic, but they don't have like, hey, I didn't leave the party. They're switching because I didn't leave the party. The party left me. I mean,
Yeah.
it's going extreme. So that's what this country's kind of fighting for
Yeah.
at the moment. And so, that said, a lot of times I think for some in the far left like that, they don't really care if people are in poverty. They don't care if it's hard for people to get jobs. They don't care if that just feeds the fact that,
Big
these
government.
people, they don't care if the border is just like wide open, because the more people that come here, the more people need government handouts.
Right.
More they depend on the
The more
government,
needed.
the more they're going to vote for those
Yeah.
people who are going to give them handouts, right?
Yeah.
And it's
Yep.
just like, that's where you end up in Argentina or
Venezuela,
Venezuela, right? Or those places.
Zimbabwe.
Yeah,
Yeah.
that's crazy. So anyway, so now you.
Yep, it is. And then the last thing I want to touch on, which is coinciding with all this, was the price controls have been mentioned, and they've kind of backtracked from that right now, the Harris campaign. But a lot of people don't understand the theory behind price controls and what that actually means. So I just want to educate the listeners and viewers on it and talk about historically what that's been, how it's done, and how it's actually been very detrimental to the economy of that given country or society. So if you look back to the late 1960s and 70s, the Federal Reserve printed too much money relative to real GDP growth. And that resulted in repeated bouts of and spikes of high inflation. I mean, you were really young. I'm sure your parents would tell you they remember that very well.
I remember it.
Right?
Yeah.
Yeah. So President Nixon, having been burned by a mild recession in 1960, the first time he pursued the presidency, he didn't want that to happen again when he was running for re-election in 1972. So in 1971, he closed the gold window, which I learned all about this. It's kind of fascinating. So no longer was money backed by gold.
Yeah.
Some people still think it is, like, oh, we're backed by gold, or they just found out that we're not, and it's like, oh, it actually hasn't been since the 70s. We haven't had gold backing our currency. So he did that, closed the gold window, and gave the Fed the chance to print money more freely. And then what he did on the back end, he imposed wage and price controls to try to hide the inflation that would follow those price controls. And after the election, inflation averaged more than 9% per year from 73 through 75. So that's why people say he wasn't very popular after the election, because prices were just so high. Now, that wasn't the first time this has happened. It wasn't Nixon's idea. If you go back to ancient Egypt, you go back to Babylon, you go back to ancient Rome, which was the most dominant, society known to man at the time. And then going forward to modern day times, Zimbabwe and Venezuela, you know, this price control idea has actually caused mass shortages for goods and services. So what does that do? Spikes inflation exponentially. I mean, it skyrockets it. I mean, even Argentina has had skyrocketing inflation, which they're still reeling back from. So why do governments do that? Because, inflation is political kryptonite. So they try to hide it. They try to manipulate it. They try to get it down, which, you kind of mentioned. Maybe that's why we're seeing interest rate cuts now. Again, all thoughts on that are valid. We just don't know. But prior to COVID, the U.S. had inflation under control for how long? 40 years. We've talked about that inflationary cycle, 40 years or so, right? Now, inflation's been high for the last few years, and politicians have said what? Oh, it's the private sector. They're gouging, the price gouging. They're taking the money from the hard-earned dollars of the American worker. But the question you have to ask as a citizen is, is what? If price gouging is the reason for recent inflation, then where were these gougers for the past 40 years? What changed? And why has inflation been such a global phenomenon? Has every single private sector company been in cahoots? And he would said 3 a.m. phone call like, hey, we're just gonna take the money from the hardworking citizens of our country.
You don't know about that call? I guess you haven't been invited on then.
I guess not. I'm not cool enough. I had to get in the club.
You're not rich enough, I guess.
So that's just an interesting question you got to ask. And again, we all can lie on different areas of the spectrum, but you got to ask it's a very simple question to ask. So the cost of government has soared though, right? And so those accusing the private sector of price gouging are ignoring that since 2012, Chicago school spending per student is up 97%, even though test scores have gone down. And you can't just look at Chicago schools either. You can look at a recent study. And again, this is a great piece I read on Monday. That's why I'm looking off screen here, because these are very important. Some good education here. The AI looked at SAT scores since 2008, including the effect of the test getting easier. Average math scores are down more than 100 points in the past 15 years, with the most drops since 2019, right before COVID. Those who want to impose price controls in the private sector want to punish shrinkflationists, but schools have been charging more and shrinking the education they're giving our kids. Where's the plan to fix that? Our kids are on the ballot, right?
Our kids are on the ballot. Yeah,
Our kids are on the ballot. So ultimately, the best way to fight inflation is to have the Fed focus on price stability while the government minimizes taxes and regulation to encourage competition and risk taking. That's what we've always talked about. It's the American dream, the American way. Make your own way. Make your own way.
Amen.
So, the good news is we don't think price controls will take effect, but it's good to talk about what that would bring about.
I don't know any place where they've had more control that things have gotten better. I mean, it's hard to, tell me a place where that's ever happened. It just doesn't. And because you gotta, again, I just heard the Democratic candidate just say that she's going to eliminate failure. And I was like, well, that's interesting. I mean, so you said something really different. That's what's great about capitalism is that, taking away competition, there's just going to be, it doesn't work. You have to have the company. That's why when there's price controls and whatever, when you're competing with companies for people's money, it forces you to get more efficient and to sell things at the lowest price possible while still making a profit.
Yeah.
And you take away competition. That's true, like in schools, right? So if the government schools don't have any competition, and in fact, you actually even eliminate the ability for students and parents to look for other schools where there might be competition.
Yeah.
We never get better.
Yep.
We never get better. And so that's what's happening incredibly in these urban areas. I mean, it's like these kids are stuck and it's supposed to be like, hey, we're taking care of you guys. No, you're not. You haven't taken care of us for 50 years. I mean, there's nothing in it that you're taking care of us because you eliminate all the competition. And the fact is that in competition, there are, to your point, American dream is there's opportunities to be successful. And then yet there's times when I've had to compete and I've lost. And I'm getting beat, and I have to go back and say, hey, I got to regather myself and let's go. We got to go back in. And so, you can argue with certain areas, people don't have that same, and I get that. I mean, there might be some others where they've started below the deck. They don't have a chance at that. But again, I'd say look at who's been in control of those places, and you'll see that they're, they eliminated that a long time ago. Didn't give those people a chance themselves, and yet they say it's the biggest problem, and it's somebody else's fault. It's like, come on. These people aren't stupid, and they're starting to finally wake up.
Yeah.
It's really, it's great, and I think it's great for America that they.
I agree.
That they are, especially in the inner cities. They're really they're getting tired of it, and it's about time. It's a little late, but they do that, man. It's a new ball game.
Yep.
It's a new ball. It's very exciting.
It is really exciting. I like that. Preach it. That's a good optimistic, tone to leave it. We had a lot of doom and gloom talk, but again, just a lot of education and again, we're not here to crucify or to condemn. We're just here to educate, put our 2 cents in and how we believe. If you don't like it, you can turn it off. But again, That's what makes America beautiful and great is we can have different opinions and we have freedom of speech, or we should, and and we got to fight for that. So
It's our job, Jay, is we're just trying. We want our clients and our people to be all that they can be.
yep,
Our job
yep,
is to try to, especially on their finances or in other places. That's why I love what I do.
mm-hmm,
Into areas where we're talking way more about than finances. There's lots of things, marriages. There's all kinds of. I mean,
yeah,
it's a people business, and I love helping people become all they can be and maximize their opportunity. And so on all of these things, we're always got kind of this bend towards like what the markets are going to do, and you know, and because that's ultimately we're helping manage their funds, and going into retirement, they don't want to run out of it. I mean, these are very important topics, and so you've got all these ancillary things out there that are very like it doesn't matter, but they do matter. I mean,
yeah,
these things do matter, and ultimately they affect all of what we're doing.
yeah,
As a society and as a country. Um, Again, I started this thing. I brought up an American, World War II book that I'm reading. It's been really interesting to read it from a perspective of the other side and to hear what they
mm,
were. But I'm just amazed, and when you go to war, and I think about all the veterans of our country here, and what has been sacrificed for our freedoms. It's astounding to think that we would like walk right back into not being free,
yeah,
and that's what it feels like. And we're
yeah,
sort of at that turning point as a country. So
yep,
it's kind of amazing. It's just it's an important time. Stay on our knees, be praying, and seeking the Lord, have mercy on us. But it's an important time for our country and for So we do get excited and we're passionate about what we do, right? So that's
amen.
so
Yeah, we
good.
are. We are. We love our people. We love our clients. Such an honor to serve. And so we are at a pivotal point in conclusion. We are at a pivotal point of our country, of an election, of markets. But we'll keep you informed. We'll hold your hand along the way. That's what we're here for. But until next time,
And it's exciting too. It's a fun time. It's going to
it
be
is. It is. It
Trump
is.
is. Let's go, baby.
Let's go. Let's go. We'll see you guys next week. Thanks for listening and tuning in.